Welcome to Nasarawa State University, Kefi. My name is Professor Sambaba Adamu Tende. I'll be taking you in a course called Introduction to Business, which forms the basic foundation for all students in business administration, accounting, banking and finance, marketing, public administration, and of course, economics. All people interested in knowing how to manage businesses. Today, we are going to look at the nature and scope of business. The nature and scope of business. In this particular chapter, we are going to look at definition of business, the difference between administration and management, characteristics of business, objectives of business, functions of business, and of course, current issues in business. At the end, the whole objective is to what? To know what is a business and to know the distinction between administration and management, identifying, of course, the recent trends in business. The term business describes the social institution which economic efforts are organized. Institution, not just ordinary institution, social institution, but then their economic efforts are what? Organized. These social institutions are the arrangement devised to carry out on the production, marketing, finance, and other activities that provide goods and services to people. This means that the term business denotes an economic activity related to the production and marketing of goods and services to the society. Every one of us has some business dealings in our lives. For instance, we buy goods, we render services to satisfy our basic needs. However, we could be sellers also of goods and services. This shows that in one way or another, we are always involved in business dealings. Now, what then is the definition of business? Business refers to the organized production and exchange of goods and services undertaken with the aim to earn profits. Organized production and exchange of goods and services undertaken with the aim to earn profits. It is an approach used by individuals for the purpose of providing goods and services to mankind. Accordingly, the term business refers to the whole complete field of commerce and industry, which involves manufacturing, distribution, banking services, insurance, and of course, transportation. The term business should not be confused with the term trade. Trade simply means purchase and sales of goods. But business includes all activities from the point of production to the point of distribution. Impliedly, a business is not complete until the goods and services gets to the final consumers. And that is why it embraces all activities involved in production and service activities like banking, transportation, insurance that will facilitate the movement of goods and services to the final consumers. Then, what is administration? We need to differentiate the two. Fundamentally, the term administration connotes the direction of affairs. Direction of affairs. It refers to guidance, leadership, and control of the efforts of a group of individuals towards some common objectives. Administration is the part of management. Take note. Administration is the part of management which is concerned with the installation and carrying out of the procedures by which the programs are laid down and communicated, and the progress of activities regulated and checked against plans. In other words, administration can be said to be a purposive process which involves setting up of objectives, that is formulation, determination of policy, and the direction of group purpose. On the other hand, management is the process by which managers create, direct, maintain, and operate purposive organization through systematic, coordinated, cooperative human efforts. It is the means of determining the objectives of the group and putting them into action. Impliedly now, what's the difference between management versus administration? Like we've seen, you discover in so many textbooks and in the past, the terms administration and management are used synonymously. They mean virtually the same thing, depending on what sector. For instance, that is it in the private sector or in the public sector? We discovered one major thing. In the public sector, administration is the preferred term in government agencies and in management of business organization. The term administration is conventionally used to connote management of government or public businesses, whereas the term management is used to connote administration of private businesses. The difference between administration and management relates to the type of organization. In business firms, administration refers to higher policy, the higher level. When we come to draw up an organizational structure, you discover the people that formulate higher policies are called administrators. Those who see a difference between administration and management argue that administration involves the overall setting of major objectives, determination of policies, identifying of general purpose, laying down broad programs and major objectives, while management refers essentially to the executive function, that is the active direction of human efforts with a view of getting things done. That's why when we get back to management, you discover the simplest definition of management we always refer to. We said we said management is a process of getting things done through people. Now, what is a business firm? A business firm is an economic unit, entity, or organization. It could either be formal or an informal arrangement of people working together to succeed. However, to succeed, some type of formal organization is usually required. A business firm must provide goods and services to the public, and to survive, it must gain revenue in excess of cost. That is profit. A business firm is also a social organization which employs different types of people to work together. Which employs different type of people to work together in the organization in order to get result. Now, what about an industry? An industry consists of a number of firms. The activities of extraction, production, conversion, processing, or fabrication of products are described as industry. It is the manufacturing or production of goods. The products of industry may fall under three major categories. Either consumer goods, commerce, or trade. Industry may fall under three major categories: consumer goods, commerce, or trade. Let's pick them one after the other. Consumer goods. They are goods used by final consumers. Producer or industrial goods. They are goods used in the production of other goods. Intermediate goods. These are certain materials by which are the finished products of one industry and become the intermediate products of another. For example, in the plastic industry, the plastic products are used in other industries in manufacturing electricity wires, toys, containers, and buckets. So that is the industry, starting by looking at the consumer goods. What about commerce? You see, commerce, as the name implies, if you hear commerce, what easily comes to your mind? Trade and all activities that makes trade possible. Therefore, commerce is made up of trade and all activities that make trade possible. It refers to the process of buying and selling, which could be wholesale, retail, export, import, and all other activities which facilitate in such buying and selling, such as storing, packaging, financing, transportation, insuring, communicating, and warehousing. All these form part of what? Commerce. What about trade? It refers to the sale, transfer, or exchange of goods and services, and constitutes the central activities around which other functions like banking, transportation, insurance, packaging, warehousing, and advertising cluster and get brought together. It says the exchange of goods and services for money or other goods. Now, what are the characteristics of business? Business is generally characterized by the following features. 1. Exchange. This is sales or transfer of goods and services for a price. The purpose of all business activities is concerned with exchange of goods and services for value, that is money. In this regards, goods produced or purchased for personal consumption or as gift to others do not constitute a business, since there is no sale or transfer of value involved in them. Profit motive. Business is concerned primarily with a view to make profit. And that is why in all businesses involves dealings in goods and services. Business involves the production and exchange of goods and services. Goods produced or exchanged may be consumer goods such as bread, oil, shoes, shirt, and so on, or producer goods such as machinery, and tools. Consumer goods are meant for direct consumption. You buy and you consume directly. Where production goods are those used for further production. A service is any act of performance that one party can offer to another that is essentially intangible and does not result in the ownership of anything. Its production may be or may not be tied to physical product. Services include the supply of water, electricity, finance, insurance, transport, and of course, warehousing. Uncertainty or risks. Uncertainty or risks. Business activities are characterized by the element of risks, and that's what we refer to as uncertainty. Risks involves the possibility of possible loss, such as uncertainty of return on investment made in the business. Business risks are brought about by the following factors. Factors that brings about risks in business. 1. Changes in consumer demand due to changing consumer taste and fashion. 2. Intensity of competition in the market. 3. Faulty managerial decision. And of course, 4. Price fluctuations and other economic exchanges. All these things, there are certain uncertainties in what that comes up in what we call the external environment, which we are coming to discuss much later. And all these uncertainties, they are always uncontrollable. Managers may find it difficult to control. For instance, consumer tastes are always changing. And if you don't change to move along with their taste, then you end up losing your business. More and more competitors are coming into the market. More and more competitors coming into the market. And there may be faulty managerial decision. And of course, there are what we call fluctuations and other economic exchange, like high interest rate, high exchange rate. All this may form part of uncertainty and end up risking a business. Objectives of a business. All business have goals or objectives which they seek to achieve. Since business is essentially an economic activity, the primary objective is that of making profit, which is a prerequisite for business survival. If you run a business and you're not making a profit, there cannot be continuous existence of such a business. The goals that business set out itself are of great importance to everyone, whether he or she is an employee, a customer, an owner, or just member of the general public. For instance, the attainment of business goals affect the national economic system, which affects everyone in the society. Hence, the parties who benefit from economic objectives of profit making include owners, employees, and of course, the customers. Now, let's look at the human elements in business. Human elements in business. The human element in business is very important because business itself depends on people as investors, customers, employees, and managers. Individuals too depend on business to provide them with goods and services to satisfy their needs and wants. At every stage of business, people are involved as investors, employees, customers, or managers. Business themselves are a group of people who seek to earn profit by providing goods and services to others. Hence, it is essential to understand the different role this individual plays. Let's start by looking at them one after the other. 1. The owners of business. The main purpose of those who own business or invest in business is to make profit and increase their savings. Larger businesses in Nigeria like Access Bank, like UBA, or even in the manufacturing sector, the textile industries, their owners, the such businesses are owned by a large number of people who contribute towards the business, and they are referred to as shareholders. We're coming to look at shareholders because we have two different types of businesses, of organizations, the public and the private. The public are normally governed by shareholders. What do we mean by these shareholders? They are individuals who have contributed their money in order to run the business with the purpose of making a profit or a return on capital invested. Such people who have contributed their money to run such businesses, we call them shareholders. We're coming to look at this in greater details as we move along. Again, once you establish a business as an owner of business, a business cannot survive without the workers. Who are the workers? These are a group of people who perform the actual mental labor that is necessary to bring into being all the many and varied type of goods and services produced. These workers provide the business person with labor and skills for a price that we call their wages. They expect to be paid for the services they rendered. The business person must therefore adequately compensate his workers in order to develop loyalty and efficient work team necessary for efficient production of goods and services. And for all these people to carry on with such businesses, you need a team of people that are called the management team. The management team. Management team. These are individuals charged with responsibility of operating the business enterprises and of endeavoring to do so profitably. In some situations, owners may also be managers, as the case of small businesses. However, in larger businesses, particularly those owned by a great number of stockholders who are now the owners, the management may consist of individuals who may not own any stock in the business they operate. Management has the responsibility of satisfying three groups of people. These are consumers, workers, and owners. The consumer must be given a good product or service for his money. The worker must be fairly compensated for his labor and skills, and the owners must receive a fair return on investment. Now, the owner manager. This refers to a business person who operates his business himself. The disadvantage here is that if the business has a bad year, the owner manager too has a bad year because his pay is what the business earns. Some of the objectives of the business managers include 1, to be independent, that is, you want to be the boss. 2, to be responsible for the development of their abilities, so that when they succeed, they know that it is through their personal abilities. 3, to maximize earnings. 4, to achieve the status associated with owner managers. And of course, 5, maintenance of family tradition. You know, we have some businesses owned and established by the family, and the owner manager may love to continue maintaining the family tradition, family cycle. Now we have the professional manager. A professional manager is one who works for others. He attempts to achieve the goals that are established by the owners of the business. He is responsible to the owners of the business and his action and his performance, and judged by those who employ him. He generally becomes a specialist in one particular aspect of business than being generally responsible for the entire operation. Like when we come to look at the functional areas of business, you discover what? You have the production, where the production manager is a professional. The marketing department, where the marketing manager is a professional. The finance department, where the finance officer is a professional. Human resource department, where the human resource manager is what? A professional. They are generally specialists in a particular area. For instance, a lot of you now, doing this particular course, you have the intention that in future you want to become professional managers. And that is why some of you are in marketing, others are in management, and others are even in public administration. They want to be professionals in their various areas. Current issues in business. Business of these days have certain challenges. It includes things like globalization, which we're coming to discuss in greater detail. Diversity. For instance, even now in this class, you discover what? Different people from different backgrounds coming in to work, coming into school. The same thing in an organization. Like in national state now, we have different people from different diversity, different background, different religion, age diversity, all coming together. And of course, ethics and social responsibility. The current issue now is that businesses must be socially responsible. What do we mean by them being socially responsible? They must contribute to the well-being of their environment, where they found themselves located. And of course, we have issues like globalization. The world is now turning into one village. Globalization means being able to deploy a company's best achievement in any country to the rest of the world. And this is what makes it a global market. So we're coming to see all these things in greater detail. We talk of diversity, like I said, the degree of differences among members of the group in an organization. And it has its own problems, which is always associated with things like ethnocentrism, prejudice, discrimination, and so on and so forth. Ethics in respect of ethics as standards of right and wrong that influence behavior. Right behavior is considered ethical and wrong behavior is considered unethical. Again, we're coming to look at that in greater details. There are other issues associated, TQM, total quality management. Let everybody in the organization, of course, work towards quality. Everybody must be involved. And productivity, that is performance increase relating to output along with what? Inputs, because businesses are out to make profit. And of modern time, you discovered what we now call participative management in organization. We want employee to participate. This is done through effective communication, motivation, and empowerment. And of course, of recent, In organization, we discovered that things are work towards team. So, I give you a little exercise. In your own way, what is a business? Differentiate between administration and management. Write short notes on the following: globalization, teamwork, productivity, and quality. This assignment has to be submitted within the next 2 weeks. Thank you very much. Until we meet again in the next lecture. Do have a pleasant day. Remember, we talk about teamwork. Move out, organize yourself straight away as a team so that you can discuss and exchange some of this, discuss some of these ideas. Have that mindset that you can also do it. Because when you look at businesses, we are all operating one business or the other. One business or the other. Where we are not even operating, we are participating in businesses. So for us to even have a knowledge of a business is very important. Very important. And once you practice most of these things, you will discover that we'll end up achieving the Lord within the shortest possible time. Thank you very much.